Hello and welcome to my show. It's Monday, March 20th, and today I just wanted to give you an update on everything, all things real estate, and just give you a brief overview of what I'm seeing in the market. Um, 2 Fridays ago, we heard about a bank failing, and then over the weekend, a following bank failing, and now we're seeing banks not only being affected here, but even in the Swiss bank. So, all of this is causing a lot of uncertainty in the real estate market. And I wanted to just share what I see happening in my local area of Los Angeles. I have been working with buyers at this moment purchasing a home in Los Angeles at an entry point level. So that's people buying their first home in Los Angeles. And what I see is that each house is getting multiple offers, is very, very less homes on the market. And even though there are several of less buyers on the market, there's also even less sellers on the market. So prices are not dropping here in Los Angeles, they're sustaining. I'm seeing that each house that we go see has at least 3 to 4 offers, which is a strong seller's market, I would say. I don't see sellers giving too many concessions because of the stringent of the limited inventory. This is a time where most people start to get ready to look at homes, and all this news about the banks has really changed interest rates. So um, the bank failed on Friday, November. I'm just keep saying November, March. I can't remember the date, but the following Monday, rates dropped substantially, and we just saw a flood. Analytics show that a lot of people started to go back to apply for homes again, and by Friday, the interest rates were back to what they were. So the interest rates are fluctuating a lot. I There's certain, don't listen to me and my perspective, but it's better to look at what experts are saying regarding interest rates. SCE is a big website where people think the where the stockholders, stock traders look to see when they think the Fed is going to change their stance on interest rates. And at the moment, it looks like they're estimating that to happen around June. And they have different statistics on when they expect that to happen. And they have all sorts of information and data on that. So that's what experts are saying, that it's possible that in June there'll be a change in the rates to lower. Another important thing to note is that now the Federal Reserve, that was constantly hiking now the rates, is now looking at what's happening and the bank failures, and they're trying now to mitigate this bank collapse all over, especially for smaller banks. And there was an emergency kind of meeting held yesterday, and they made an announcement that between Japan, Canada, US, I had a list in front of me and I don't have it now. There is going to be instead of it being a weekly trade, like bonds are sold. I'm not a bank specialist, so I'm trying to research and learn all these things as I go. But basically, on a weekly basis, bonds are usually sold where banks get their money. And that used to be on a weekly basis, and they're now doing, with all the volatility in the market and everything going on and the lack of people going to get loans, which is how banks make money. They're now going, and now everyone's rushing to the bank to get their money out, right? So that is not going to go on a day-to-day basis. um it I'm not going to read the Federal Reserve announcement to you, but I think at this point, the Federal Reserve is not trying to mitigate, and I don't think they're going to keep hiking the rate. Again, and this announcement they're making, they're probably going to end up printing more money, and that is more inflation, which we got in this mess because we are trying to solve inflation. So it's a very interesting time, and it's a really good time to learn. So I'm spending a lot of time reading all this, following this information, and good thing I have an MBA and a minor in economics, because it really helps to see the dynamics and things like that being at play here. And really, what we're dealing with is inflation. And although the Federal Reserve is trying to combat that, I'll reserve my personal opinions on saving banks and bailouts and all that. But I do want to remind people that back in the 70s and the 80s, there, no, 60s and 70s, when they were dealing with so much inflation as how we are now, there were about 21 banks that failed. And my job as a real estate agent is to serve my clients. So I did want to mention a few things today. If any of you, I realize that real estate is a necessity. We all need a place to live. And if any of you need to move, there is a time when all this started happening that people were not relying on banks as a primary source of loans. And we might start to see that. I want to explain to you, like, for example, if any of you have a FHA loan on your home, did you know that FHA loan is a assumable loan? That means that if you find someone that can qualify, that the bank will allow that person, another person, to keep that loan and make the payments. So if you are interested in selling and these things are just kind of overwhelming you and you feel like, oh, what's going to happen, there are different ways to finance homes. So it's not just all like a regular bank loan that can happen. There's different things that people can do, and these things had to be a resource back in the day. Another thing to consider is that if you were to, let's say, a lot of people are saying, well, I don't want to sell my home. I see a lot of people that want to sell keep their homes and maybe transfer it to a family member. That is possible too. And there's different programs like a gift and equity program, where you give people the home at the value it's at, or if you want to sell it to them for a discount for where things of that sort. There's also a lot of different financing tools in that sense. And now, property taxes. I wanted to share with you. People need to move and all that. So if any of you are, like, for example, 62 years or older, California has a Prop 19 that helps people that have been through natural disasters or are seniors, and you could move, um, and you could move, and that will not trigger a tax assessment. Or if you do an intra-family transfer, or if you decide to sell your house and move to another house because you need to, there's Prop 19 that will help you save on your taxes. So I have here an example. I'm using, for example, my dad, he had a primary residence where it's a triplex, and then now he's upgraded it, and if he were to sell it, it would probably go about for $1 million. So I have that here on the diagram to the left. Now, if he were to purchase a home where he wants to downsize, it would probably be $650K. Now, without Prop 19, his property taxes would go up to $7,000, almost $8,000 a year. But with this calculator, we could see that his taxes, he could save on his taxes, and with Prop 19, he would only pay about $1,200 on his property taxes a year. So this allows people who of a certain age to transfer their basis, their tax basis from the old house to the new house, and not have to pay all these property taxes. Also, if you are older person, there's 62 or older, you could use a reverse mortgage. There's a lot of tools available for people who need to downsize or upsize, and there's different financing and tools available. So if any of you are in that situation, please feel free to reach out. I am monitoring closely all these things happening with the banks. I have a special program too for people who are interested in purchasing their first home in the counties of Orange County, Riverside, LA, and Ventura, where you get a lower interest rate, almost 1 point lower at no cost. So if interest rates are 6.5 for today, you would get the interest rate at 5.5 with no PMI. No PMI means if when you don't put the 5% down, you're required to pay a monthly mortgage insurance. With this program, you would not pay that. So you would save on the monthly payment by not paying that mortgage insurance. You would get a lower rate and you wouldn't have to pay for that rate. Of course, you can't make more than certain amount of money depending um on your area. So there's certain income limits. So if any of you are interested in buying and you're already paying someone's mortgage, remember that if you're renting, you're paying someone else's mortgage. But if you know you're going to live in the same house for a year or two, I think it is still good to buy. Prices are sustaining. Don't worry about it going negative. It's very limited inventory. So if you want to purchase a home, I have very special programs at this moment that could help you navigate the volatile market we're in. So just whatever you need and your real estate needs, questions, interfamily um, changes that you need to make on your title, please reach out to me. I have title specialists that can help you out with your special needs. So we'll look to see what happens this week with the banks. It's all like a unraveling novel. So we'll see what happens, and I'll see you next Monday. All right. Thank you, everyone. Have a great day.